Hello everyone and welcome to the new episode of the Learn and Trade with the Popeye series. In this episode I go back to some basic concept, but I'll try to address it also in a little bit more advanced, let's say, way, because still I see a lot of confusion on the topic that is market structure. How market structure work, how market structure are broken, and what level should be considered to see a change in structure. It sounds simple, but even big accounts, many followers, many people are making mistake or asking questions. So I think to be sure that we properly understand the basic concept of trading, it's of paramount importance, because if we don't understand the basics, we can do much in our trading journey, and because this is really one of the most important concepts overall on learning how to read naked price action. So as always, before moving to the video, big shout out to Bluefin for sponsoring the channel. Make sure to trade with me on Bluefin. You will find the referral link on the description below to enjoy a 20% discount on trading fees and to be eligible for the very cool campaign we run with the team. One is currently ongoing. I'll show you later the details. Bluefin is non-KYC, so you simply need an email address to start trading and no need to share any of your personal information. Also, to make sure we make all the homework, make sure to subscribe to the channel, leave a comment and a like, so you will help me to grow the YouTube page. But without further ado, let's check some chart and let's deep dive on the concept of market structure. As always, we start from the basics, and the basic of market price action theory is that price, as much as you want to complicate things, can do only three things: uptrending. So when we form a series of higher highs, followed by higher lows. So an uptrend must have these two simple characteristics. The structure should be higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Always an high need a low need a high. A structure is always composed by two components, the high and the low. The opposite of what the market can do is to have a downtrend. Look, it sounds simple, but still, when you look at the chart, many people make a mistake on this concept. A downtrend is a very simple market schematics that has a lower low, fall, and a higher low. Higher low, lower low. So the schematics is very simple, is the opposite of the uptrend, and to make a bearish or a downtrend, a bearish market structure or a downtrend, you need two components, the low and the high, the low and the high, the low and the high. Always remember the two components of a market structure. The third things that the market can do, that price action can do, is to go sideways. So form a range, form a consolidation, distribution, accumulation, week of schematics, I don't care the name you give it, but is simply going sideways and going laterally. So not up, not down, but sideways, laterally. This is a market going to the top right corner. This is a market going to the bottom right corner. This is a market going to the central right, okay? Not a clear direction. In this case, market structure is important, but is much less relevant, we will see, comparing to an uptrend and a downtrend. So this is super important concept. In an uptrend and in a downtrend, market structure, so the series of higher lows or lows and highs, are of paramount importance, because we want to respect the trend. So for example, in an uptrend, we want to long the higher lows. In a downtrend, our priority is to short the lower highs. And so. For an uptrend to break, it needs to break the structure, so we will see later, it needs to change something before starting to downtrend. These two dynamics are where market structure is of paramount importance. We will see that market structure is important, or you have seen in all my video about ranges that market structure is also important in ranges, but is less relevant. So it's because of the price is fractal, the interest is on low time frame market structure to see potential reversal, but the most important concept in ranges is range high and range low, support and resistance. So it's more important than the market structure are these two levels, because we are going sideways, and potentially we know that when we go sideways, these two levels are even more important than the market structure itself, because in an uptrend it can go up forever, a downtrend it can go down to zero, but in a sideways, a range price action, what is important is not the target, the infinite target to the high or the potential zero target to the low. It's more important the support and resistance, the range high and range low level, because it's a range and we assume as long as we range that these two levels are more respected than the market structure until that range is finally broken. But let's say this video is not about ranges, it's more about market structure. So one of the first concept that I already mentioned, but is super important to understand, is the fact that a structure is composed by two components, the high and the low. So why this is important, this concept, and how to develop it? Because when we are starting, for example, or we are uptrending and we form this sort of market structure and we are here, we would like to long this area, okay? So potentially we expect the price to go up here, and we try to long because we see this is an uptrend and we want to follow this uptrend, and we try to long here. But we will never know if this is truly the low until, this is very important, the high is formed, okay? So we will confirm that this is an higher low, so higher high, higher low, when this higher low is confirmed, when this higher high is broken. So this higher high has confirmed this higher low, okay? So now we are trading here, we want to take a long, or we want to position, or we simply want to analyze something like this because we expect to go higher. This low will be confirmed as a higher low of this bullish market structure just when this high will be violated or broken, and we will form another higher low. So same, we can start with this concept, and again, price is dropping, we hope to have another higher low. This is hope, this is an expectation, or whatever you want to call it, but this will never be confirmed until this high is again broken to the above, and we will know that this was truly a further higher low. Why I'm saying this? Because until the price action is here, we don't know. It might go down, it can break. So this bullish market structure is broken. Or perhaps price can do something like this, move a little bit here in the fractality, go a little bit lower and then go up. In this case, this was the final higher low because it's lower than this one, and the confirmation is that we have violated this level again. This that we had here is just some internal structure, low time frame, lower time frame, or whatever, but in the grand scheme of things of this structure, the real low is this and the real high is this. So this was not a final one. When we will know when the high is violated. Always you need, and I need to repeat this many times because really I see this mistake many times committed, we need to have an high to confirm a low in an uptrend, and in the downtrend the same, we need a low to confirm an high. Let me give you a very quick example on, for example, Bitcoin here. This is the 3-day chart. I had it open. You see, people could have said, this is the lower high. This is the lower high, but at the end, we never violated this high here, you see? Until this low was printed, this high was violated, so the structure is this one, and going up. Same concept. This was the high, this was the low, this was the high. So the people could have said, this is the lower high, the higher low, sorry, this is the higher low. No, all of them are not, because all the bounces we had after didn't violate this structure. So when finally this happened, we could potentially see this is the higher low, but when we confirmed this is higher low, until this high is not violated, it's just a speculation. It's just an hope that this will be the higher low. You always need an high to confirm a low in the structure. So this example I think is super clear of all this low being printed, but nobody knows until this is broken. So in this case of Bitcoin is probably a 30k move, long time, but when this was finally broken, now we have a new structure and we look for a low and we look for an high. Always you need the couple to confirm a structure. To confirm doesn't mean that you cannot trade it. So you could have taken a trade even here, where your invalidation was the other structure here, pretty pointless trade in terms of risk reward, but you understand that just for a theory, for a concept point of view, you need an high to confirm a low. You need a low to confirm an high. Okay? Same goes for the bearish market structure, where, of course, price is going down. We know it's going down. This is a confirmation. We have a lower low, lower high, lower high. The low is broken once again, so we know that this is downtrend. So what is our interest? To short somewhere here before this is violated. We use the Fibonacci, we use supply, we use demand. This is not the point of this video to try to find this entry, but when we will know that this is really the higher low on this bearish trend, the confirmation once again is only when this is broken once again. This is broken, okay, that was the highest point that this structure got before forming a lowest point once again. So in this case, once this is broken, the highest point of this structure, in this case this one, was the lower high, and we know that the structure is continuing. So what is important? That whenever you try to analyze a chart, you focus on the structure, on the time frame you are interested. And I absolutely don't care what you choose. You can trade a 1 minute, you can trade a 5 minute, you can trade a 1 hour, the daily, the weekly, the monthly, but the concept is always the same. You have to select a structure that you are interested on. So this video is being recorded Friday, 21 of November. Not sure when it will publish, so things might change. And we can take as an example this hourly structure of Bitcoin, Ethereum is pretty similar. Then you can see that, for example, if we want to exercise a little bit, then you can also pick the 4 hours, but probably in this case is more relevant the 1 hour. You can see that there is a structure. Low. Here there is not really an high. Probably the last high is this one. Okay, let's see that this is the last low. This is the last high. This is the last low. This is the last high. Now we have an acceleration. Someone could say that this is something to me is not really relevant. This is the following low. This is a low. No, this is an internal structure. Why? I think this example is very important, and this is where many people misunderstand, because the low is this one. Sorry, the last structural low, fuck it. The last structural low is this. The last structural high is this. So it's the highest point before starting to go down. So we have a low, we know this is a downtrend. We have a low and is here. We have an high that is the highest point we reach after that low. So potentially this is high. When I will know that this high is confirmed, when this low will be violated. I'm sure now you're following me because I explained this concept. We have a low, we need high. We have high, what we need? A low. So when this high is confirmed, when this low is violated here. What is happening here is something else, is something in the middle. So let's make it like this. We know that this is our external structure. Sorry. External structure. We play the replay. Not sure what it's doing. No, I did some leave. So we want to play the replay. Start the new. So we know this. We know that we have an high and we have a low, okay, in this level. So we are interested only on this and this in terms of structure, okay? So should this be going up, still not anything related to the breaking of structure, because we are still waiting to confirm this. So as long as we are below this one, this structure is not broken, okay? Because this could be potentially be a fake going up here and then going down, okay? So this is the structure we are working on. So we want to see if it's a continuation where the low will be formed. So we see how it's going. We are still within that structure, still within the structure. We see how it's going. Okay, this low is taken. Okay, so now we have a new interesting structure that we have formed a low. What this low has been confirming? The high. Okay, so now this high is confirmed because we have a new low. Okay, you always need a low to confirm an high. You always need an high to confirm a low. So once this low is done, we know this is now less relevant. Now the break structure should be this one. Anything was happening here in the middle was not relevant. Okay, now the break is here. Now we can put play. Is going, is breaking the structure. No. Again coming down, potentially coming down. So we have a new low. There you go. Now we have a new structure. So now what we have, this is the new low. What we need to confirm the low is the high. We have the high and now we have a new low. So what is the new structure that we are interested in? Is now whatever happened there, but the high to be broken now is this one. It's not anymore the previous one, because we had an high that has confirmed a low and a low that has confirmed a high. Sorry for the game of words, but we know that now the new structure is this one. Let me clean a little bit the chart. So now we know that the new structure is this. If we want to see a bullish market structure break, this is now the new interesting high to be broken. Can continue a little bit the exercise to make sure we understand it. The low is here. Not sure this low is confirmed because we need high, you see. Now it's moved lower. Now it's moved even lower. This is potentially a level. and I think this is now. Yes. So this is the new high. Here we can have some discussion. This is for now the low. What we can have a discussion here is this. These are the moment where reading price action become a little bit subjective. So do we want to consider this one, or do we want to consider any of these two? Do you see the difference? Let me. So we know all those levels. Here the structure was very clear. We are still in the 1 hour, then we can move lower low, lower high, lower low, lower high, lower low, lower high. This is for sure a low, but we can have an agreement, a discussion on this one, because structurally something is happening here. Probably on the lower time frame is more clear. Let me make it more high. And this is potentially a sort of structure, you see, lower low, lower high, lower low, lower high. So we can arguably say that a breaking structure now, again Friday 22 of November when I'm recording, is this. The read here can be a little bit subjective, but to me this is a structure, because it's a low, it's high, it's a low, it's a high, it's a low, and a high. So this is what makes this structure the way, at least I see, when you have to consider the structure, and I hope it clarified the point of the internal structure that is not relevant. So in this case now of the reading of Bitcoin, the structure to me present on the 1 hour time frame is this. Whatever happen here in the middle is not relevant 1 hour structure. So if the price go up, come down, start to do stuff like this, and then potentially break here, this is not a 1 hour breaking structure, because we are still in the boundary of the real structure. This structure should be broken, as it happened here. You see, this is a little movement, but still is a breaking structure, because the low is violated here down, and the high is never broken. So it's again a structure of the external structure we have. Now, until the high or the low are violated, this is just an internal structure. Price is fractal. So if you want, you can go inside this and look for 15 minutes, for example, time frame breaking structure. Bitcoin gave several 15 minutes breaking structure on this downtrend, and they can be tradable, but they didn't produce any relevant, in this specific case, change in structure. So if we look the same period, we can see that, I don't know, low, high, low, this high is broken. So this was a breaking structure that was short-lived, because yes, this was saved, but at the end, again, this was broken once again here, and this structure again continue to be the predominant, the 1 hour. So it needs some eye to understand at least which market structure is more relevant. What does it mean? Which market structure in the relevant trend you are trying to trade is not chopped out. So as we have seen, the 1 hour was never broken in Bitcoin for potentially from here, at least from the 9th of November until the 21st of November. So this is a very relevant 1 hour market structure on this downtrend. It's a very good portrayal of downtrend, this 1 hour market structure. If we look at the 15 minutes, it was broken several times. It was broken, but it was a fluke, was a fake out. So it was not a market structure relevant for this specific downtrend. If we go above to the 4 hour, yes, interesting, not broken either, but what is the problem? That in the 4 hour, I am not sure where is the high. I mean, it's probably, since this downtrend is very strong, is pushing very, very strongly, the 4 hour structure become really not relevant, because it's potentially this one. I don't see any sort of structure here on the 4 hour. Then people can argue that this is a structure. To me, no, because you see the low are lower than the highs. Probably this is some sort of structure. Okay, subjective way of seeing. I don't see it relevant. This is the last 4 hour. You want to see it more clearly, as I always give as a tip, use the line. You see, this is not a structure. This is just a line going down. While if we go in the 1 hour, this structure is more visible. You see, the structure here is visible. But if we go with a linear chart on the 4 hour, it's just a drop over a drop. Boom, 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 boom. There is no low, high, low, high. This is really a carnage going down. You see, even if you want to use it, this would be the linear, this would be your first structure break at 91. While if you use the 1 hour, it becomes more relevant, you see, is here. Because to me, this is more a trend representation, structural representation of what is happening here. Then once again, everybody free to use the 1 minute, the 30-second chart. I'm saying what I see as relevant and what I see as tradable, actionable on my eyes. But before going to some other concept, especially for the market structure break, remember that any trade you take with these videos and all the educational video that I post, make sure to trade with me on Bluefin. Bluefin is a super cool non-KYC exchange, so you just need an email address to join. You will find the referral link down in the description below of the video. You will enjoy a 20% discount on trading fees lifetime, and you will be eligible to participate to all the cool campaign we run with the team. Currently, we are running this campaign until the 4th of December. There is a 10% future training bonus on all your deposit. So you deposit 1K, you get $100 of future bonus, and also you get trade reward. So the more you trade, the more future bonus you can get. So let's say you deposit 1K, you trade, you make a volume of 100K, you will get $200 of bonus. As always with all campaign, make sure you read very well all the rules down below. You will find them also in my Telegram channel, and make sure to join Bluefin with me. It takes really few seconds and just an email address. So, to move a little bit further on the whole discussion about the market structure, I lost my squiggling. So what is the point? Whenever we see a market structure shift, so let's say that this was our beloved 1 hour market structure on Bitcoin, and price is here and is starting to push higher. Now we are curious to know if the market structure will break. Will break, we know when it will go above that high here. So if we stop here and continue to go down, it will just be an uptrend. But if it does something like this, we can start to have a conversation that something is changing, because we know that here we had a structure that was not violated. So we form another low. Then we know that here we had a structure that was never violated. Now we have the high is important to be broken in a downtrend. The low is important to be broken in an uptrend. No? Because in this case, we are going down, we need to break the high. So now this is broken. Now that this is broken, we need another component to confirm that this will be a uptrend. And what is? We need another two components actually. The first one is the next low. And the next low should be an higher low. Because now we broke this structure here, thanks to this high. Now potentially, positioning Y from a structural point of view, we had a first sign, we want to long higher low. So we will position ourselves using Fibonacci, demand, whatever is your style, and how this whole game will be confirmed, and how we will be happy as a trader when we will print another higher high. So in this case, if we are an analyst, we will just observe. If we are trader, we will try to position ourselves here. Our invalidation will be below here. And our confirmation, let's say, or our profit target or whatever you want to do will be once we break further for the second time, we will print an higher high, higher high, higher high. So we had the first higher high that has broke this downtrend. Is it a fluke as the one we have seen in the 15-minute chart in Bitcoin? We don't know yet, but this is still a sign. It's a sign that together with other conference, with other system, whatever you're using, it will tell you that you potentially can trigger a trade somewhere here, as close as possible to here, to have a good risk reward. And when all these theses, so we have a start of an idea, we have a confirmation of the trigger of an idea. Our idea is filled in a trading setup, and when it's confirmed, we will take profit above this level because we will finally know that it's true. This downtrend has been broken and the market has started to move higher in what would appear on something like this. Okay, this is to make it super schematic. Or if we want to see our very famous 1 hour trend on Bitcoin, our structure, we say, is something that looks like this, a little bit more weird down here, tack and tack, tack. What we are interested now, to see this structure finally broken, we want to see this level broken. So to be a little bit more specific, broken with the linear chart would be better. We will try to enter somewhere there, and we want to see again a further broke. You can use, for example, a Fibonacci or a demand level that in this case is the red candle, but you will find here in the Learn and Trade both a video on explaining how to use Fibonacci and a video on how to select demand, and you will take your trade somewhere here, your invalidation will be somewhere there, to make it super simple. Then in the practice is a little bit more complex, and should the trade work in this way, we will have a confirmation that we had a first breaking structure, a confirmed change in character, and a trend reversal because the downtrend has finally broken and now we started to uptrend. If after this one you get filled and you go down, I'm sorry my friend, this was a fluke, and probably we are still at downtrending on a higher time frame, and the 1 hour break was not the one to really pay attention. Nothing is certain, not because we get a market structure break we know that the trend will reverse. To my approach, should I try to counter trade a trend? So in the case of Bitcoin today, Friday 21 of November, is a downtrend, so I'm not long in a downtrend if the market is not at least able to show me a little sign of strength with a little market structure break, because otherwise you will long an infinite series of lower low. That is what the market has been doing until now. So just to close, a quick summary to make the video not too long. I really hope we clarify many concepts. First of all, market can do three things: uptrend, downtrend, going sideways. What we are trying to focus today is uptrend and downtrend, where the market structure is very relevant. You have to define the structure you are looking. Price is fractal. There is a structure in the 1 second, in the 1 minute, in the 15 minutes, in the 1 hour. So you have to develop your skill to select the relevant structure you want to trade, and you are fully free, completely free to choose any structure you want, but should be relevant in a specific trend. So do not choose a structure, a time frame where there is no structure. So the time frame you are choosing should have something that is a portrayal of a structure. So whenever you select the structure, the point mainly to focus is that market structure is composed by two components, an high and a low. a low and an high. So whenever you want to confirm an high, you will need to see the following low. Whenever you have to confirm a low, you will need to see the following high. Once you have this, you will have a boundaries. These boundaries will determine where the market structure on that specific time frame will occur. Remember that in a downtrend, first break in structure is always the high, because we are going down, so you need to violate the latest high. In an uptrend, to break an uptrend, we have to violate the low, because we are going up. To see if there is a reversal on an uptrend, we have to break down, so we have to break the low on the other direction. So always select the external structure, not the internal, as we have seen in the video, and wait the relevant break. In a downtrend, we will break to the above, so we need to break an high. In a downtrend, we need to break the low to go down on the other direction. So do not make confusion on this important topic. Downtrend, we break the high. Uptrend, we break the low. Once that is broken, the further part is that we have to see the following couple, the high and the low, continue to go in that direction. And this is where you will potentially place your trade setup, your invalidation, and if you have lucky, the market is with you and you get a reversal, price will go in the other direction and your trade will not be invalidated, and we will form a low where you are filled and an high when the trade is moving. I think is everything for market structure. I really hope that I clarify many doubts on the concept. It's a simple concept, but believe me, many people are still making very simple mistake and confusing, especially internal structure with external structure, and where many people misunderstand the concept of breaking and confirming a reversal on the other direction. I think is everything for today. As always, if you enjoyed the video, make sure to trade with me with Bluefin, leave a comment and a like, and make sure you are subscribed to the channel. That's everything for today. We see you in the next one. Bye. Take care.